Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. A very quiet Friday, you have to say, for the benchmarks. Nifty's flat with some positive bias. Midcaps are seeing some profit booking, but it's been very range-bound so far, Vivek. But looks like bulls towards the end of the week are like, we need to chill.
That's what we all want to do. The mid-cap index, like you can see, a little choppy and seeing some red over there. So very range-bound, choppy session is how best you could describe it so far. But quite a lot lined up on the show. Let's start off with the top headlines. Stocks trade range-bound ahead of Fed Chair Jerome Powell's speech at the Jackson Hole Symposium later this evening. Autos gain while realty and IT stocks sulk. Mid-caps underperform.
TVS Motor zooms more than 3% after brokerage firm UBS issues a buy call and raises the stock's target price to 3,200 rupees a share, citing new model launches that can further aid volume growth.
Nykaa surges in trade after 1.4% equity changes hands. Prominent pre-IPO investor Harinder Pal Singh, the likely seller, stock up over 8%.
Central Depository Services surges after company announces bonus issue of shares in 1:1 ratio. This has been adjusted for as well. The stock is up over 12%.
RailTel surges nearly 6% in trade after the company gets a work order worth over 52 crore rupees from the Uttar Pradesh Police Recruitment and Promotion Board.
Okay, all right, those are the top headlines. It's a very stock-specific market is what you have to say. While on the benchmark, there's not much action. As we've been pointing out, it's been quite flat, 13 points higher on the Nifty, 24,800, above that mark for now. And it's been consolidating around those levels for a while now. Mid-caps is where we are seeing some action on the downside. So mid-caps are down around 112 points as we speak. Banking index has been under pressure. It's been a laggard versus the Nifty pack, and that continues to be the case today, though it is not falling as much as the mid-caps right now. Nifty IT has come in for some pressure. Nifty FMCG also. Nifty Realty is the biggest loser as well, 2% down there. The small cap index is absolutely flat. So yesterday as well, we saw that the small cap index did well, but it has reversed some of those losses today. So again, a very stock-specific action. That is something we'll speak about on the show today as well, Vivek.
Absolutely right. Very stock-specific. In fact, one segment that's doing quite well actually is the auto pack today. You've seen some brokerage upgrades coming in. So look at names like TVS Motors, look at names like Bajaj Auto. All of them are doing quite well. And there appears to be a sentiment rub-off effect after the Ola electric listing. But a whole host of stocks is what Hormaz has on his radar. Hormaz is standing at the wall. This is a special segment, Mid-Cap Movers, where Hormaz will take us through the mid-caps that are buzzing in the session.
Absolutely in snooze mode is the market. Well, very typical of a Friday. Actually, not very typical of a Friday, but going into the Friday weekend is staying light on positions. But mid-caps is where the action lies, and CDSL trading ex-bonus today, continuing from where it left off yesterday as well. 13% higher now as we speak at the high point of the day, as is SEPC, earlier known as Shriram EPC, after the confirmation certificate that it won. 18% higher there as well. Apar Industries and Fortis Healthcare are some of the others that are doing well in today's session. It was a day of block deals yesterday. It's been a day of block deals today as well, and a couple of them that happened in today's session. On seeing opposite moves there, Nykaa is now at the high point of the day, 8% higher. Ambuja started off higher but now has cooled off and has moved to the low point of the day. Is trading almost at the flat line as we speak. Real estate as a sector is under pressure in today's session, while most of the other indices are sluggish. But there's some selling pressure emerging in Macrotech, Phoenix Mills, Prestige Estates, all of them trading at the low point of the day now. 2.5% to 5% are the losses seen in these names. Some other stocks that are doing well on the back of volumes, and Minda Corp is one of them, 9% higher in today's session. RailTel, after the order win, is seeing gains of around 5% on the back of very strong volumes. And lastly, take you through some names that are trading at a 52-week high. In today's session, there are around 20 to 25 stocks that are at a 52-week high today, and Himadri Specialty Chemicals is one of them. It's seen a very sharp spike in the last few minutes of trade, almost 9% higher now. And Dixon Technologies continues to be where it has been at a 52-week high. Back to you guys.
Okay, so some interesting names there. Some are the usual ones actually, but some of them are seeing some new entry as well. Thank you, Hormaz, for joining us as always and taking us through those moves in the broader markets. It's time to get a technical check on the markets done. Rujit Jain of 5paisa.com is joining us for that. Rujit, good afternoon. What explains the mood of the market right now? You think consolidation is the way to go, or maybe last 1 hour could see some action?
Yeah, hi, very good afternoon, Sonal. Very good afternoon, Vivek. Well, the broader trend for the market still remains positive. Last few tradings, in fact, if you look at this entire week, we have seen a slow and gradual up move in the index, but the intraday range has been very narrow throughout the week. So not expecting any significant move for the rest of the day, but the short-term trend still remains positive. And if you look at the F&O data as well, client section has been sitting with a long short ratio of about 52% right from the start of the week. FIs have long short ratio of about 52%. So none of the parties are looking to create fresh positions on either side. So I think that's the main reason we are witnessing this range bound intraday range moves on the index. But if we look at some higher time frame charts, the RSI still remains positive, which indicates that the overall trend is still positive. Just on the lower time frame charts, on the hourly charts, we are a bit in the overbought zone, but that overbought reading should get cool off either with some consolidation, which we also call a time-wise correction, or a minor dip towards that 24,650 to 24,700 range, but not expecting any significant down move from current levels. So one should continue to trade with a positive bias. If one is looking to trade in the index, then I think any dip towards that 24,700 if comes should be a good opportunity to buy again. But for now, one should take a stock specific approach and look for trading ideas on the long side.
Good to hear that. Richard, which are your top picks for the day?
Yeah, so we have a couple of recommendations on the buy side. First, it would be a buy call in Coal India, where after this consolidation, the stock is on the verge of a breakout of its previous swing high resistance. So it could resume the uptrend from current levels. Traders can go long with stock below 525 for potential targets of 560. And Tata Consumer is my second pick, which too has gone through some corrective phase in the last few days. But the 40 DMA has acted as a very good support in this correction. So expecting it to resume its uptrend from current levels. With stop below 1170, traders can go long for potential short-term targets around 1260.
Okay, all right, Richard, thank you so much for joining us with those technical bets and the outlook on charts as well. We'll slip into a short break. When we come back, we'll talk about a lot of these stocks which are buzzing in trade, RealTel specifically, that's buzzing in trade as well, so stay tuned for that.
Welcome back to Midcap Radar. One particular stock that's just seen a very large trade take place is Tata Technology, a relatively recent listing. This particular stock has seen a little over 2% of equity change hands just some time ago, and post which the stock has recovered, now trading 1.7% higher. The next stock on our radar is RealTel. The stock is buzzing in trade on the back of a very large order win. Rima joins us to tell us more.
Thanks so much for that. So it's about a 52.5 crore order that RealTel has won from the Uttar Pradesh Police Recruitment and Promotion Board. And the order is for live CCTV surveillance service, impersonation control through Aadhaar-based biometric service, digital fingerprint and facial recognition. So it's got the stock excited. The stock has anyway been doing well. It's up 50% so far this year, 200% gain in the last 1 year. And in the last 3 years, it's given you a CAGR return of more than 50%. Company came out with their numbers just a couple of days back. Q1 steady top line growth of about 18 to 19%, similar to what they did in the March quarter. Margins, though, have picked up quarter on quarter and on a year-on-year basis to 18.5%. So sequentially, it's an improvement of 450 basis points in margins, and on a year-on-year basis, margins went up by 250 basis points. Back to you.
Okay, all right. Thank you so much, Rima, for joining us with all those details. That's RealTel in focus. Move on, let's get in some more management commentary now. We spoke to a whole host of them. The second half of FY25 will be very strong, says Metro Brand CFO Kaushal Parekh, despite a year of muted consumer demand. In a conversation with our colleague Shilpa Ranipeta on the sidelines of the RAI Retail CFO Summit, he added that their target is to touch or exceed 100 stores in FY25. Listen in.
We guided in our earnings call, we have seen overall customer sentiment sort of, coming back. In fact, for us, even in Q1, products above 3,000 rupees, which we classify as premium, we saw the percentage of that increasing from 49% to 54%. So that undercurrent in terms of customer shopping behavior is there. We strongly feel H2 would be very strong for this financial year, and that's how for the year as a whole, we should hit that 12 to 15% overall sales CAGR. We opened 15 stores in Q1. We have guided for 225 stores over next 2 financial years, excluding any new stores that we open for Fila. We feel extremely comfortable and confident of achieving that numbers. For this financial year, our target would be to touch or exceed 100 stores, and as I said, right, 225 for next 2 financial years. So logically, for next year, we would target somewhere around 125 stores. As we had defined, FY24 was the year of liquidation. FY25 was the year when we want to reset the brand in India, and we plan to predominantly do that by placing Fila within our MBOs and eventually Foot Locker, which we hope to come in H2 of this financial year.
Well, that was management of Metro Brands, but the next company in focus is Shyam Metallics. UBS yesterday initiated coverage on the stock with a buy call and a target price of close to 1,200 rupees a share. The brokerage says the company is on track for high profit growth and forecasts an EBITDA CAGR of 39% over FY24 to FY27. Earlier today, we spoke to the company's Vice Chairman and Managing Director, Brij Bhushan Agarwal. Listen in.
In the time to come, in next 3 to 4 years, we expect that we should be able to cross more than 70 to 75%. And most of the investment is on the downstream side, on the value addition side, and also going backward on the cost side. Whatever margins we are doing today, it has to enhance because, you are seeing all the downstream projects will add more value forward, and the investment backward is also reducing the cost. So definitely the margin should improve around close to 4 to 5% in the time to come. Yeah, because if you see, all the downstreams are not very heavy capex, and it's all value add, little different. So definitely the ROC has to go up further because it's majorly on the downstream is creating more margins, and the capacity what had to be added on the upstream side has already been added, and most of the downstream, 70-80% of the raw material, we will be consuming. As Shyam Metallic is always a very investor and stakeholder friendly company, we would like to abide whatever is in the interest of the company. We would like to go on that.
All right, so those are a couple of management comments coming in that we have had through the course of the day. For now, we'll slip into a break. When we come back, we'll get you more on the markets and stock-specific action. Stay tuned for that. There's a definite recovery that is underway. The mid-cap index, which has done more than 100 points, has recovered, is down to 64 as we speak. We also have the Bank Nifty, which has turned green right now. So watch out for that one. Bank Nifty is absolutely flat with some positive bias. So there is some recovery, but the important question is whether that stays or not. That's the bigger question. In the mid-cap side, we have PCBL. That stock has been surging ever since the management on CNBC-TV18 indicated the big plans that he has for that particular business, looking at 5 times the profit growth in next 5 years. The capex that will mostly be done in the group will go to PCBL. They're looking at new segments in terms of chemicals as well. The electric vehicle segment, that continues its up move. Minda Corp is the other one which is higher right now, 8% higher on that stock. Jain Irrigation is one more stock which should be on your radar because that stock surge, it's up around 13% right now. So a couple of these names that have been surging off late. But with that, let's move on. On track to achieve 25% top-line growth in FY25, says Rohit Katyal, the Executive Director of Capacity Infra Projects. Speaking to CNBC-TV18, he also added that they aim to achieve 3,000 crore rupees of order inflows in FY25. Listen in.
Order book at the moment is close to 9,800 crores. And the 25% growth is the minimum requirement what we need to deliver in the current financial year to the clients. Therefore, while Q2, due to monsoons, though being the best second quarter in the history of the company looks at substantial growth in Q3 and Q4. And therefore, we have given this projection of 25%. If we achieve what we have set ourselves internally to do, then definitely your idea of a better growth than the given 25% number, it will surely be achieved. Our order book does not include about 4,000 crores of orders of MADA project, which we are executing in joint venture with Tata Projects Limited. So in the first quarter, we have actually added another 1,000 crores from that order book into our executable order book. And therefore, the total inflow into the executable order book in the current fiscal is close to 1250 crores. Having said that, we carry some L1 positions, and given the traction both in the state governments and central governments for PMAY and healthcare projects, that is hospitals, we are more than confident of achieving 3,000 crores, excluding the orders which would get added into the executable order book from MARA project. Last quarter of the last fiscal, we were at 8.51% margin. That was a 200 basis point increase over the fiscal 31/3/23. So basically, you already have seen a 200 basis uptick in the net profit. Similarly, an uptick in the EBITDA and EBIT margins. The order book, which we are sitting on at the moment in time, that is for sure to maintain this momentum. And as we increase our revenues per quarter beyond 650 crores, there will be an uptick of obviously another 50 basis points because of lower fixed cost as a percentage to sales.
Well, very important commentary coming in from Capacity Infra, where the company has gone ahead and given a guidance of a 25% top-line growth for FY25. The next company on our radar is PDS. The company has launched a QIP to raise funds. Upasana is here with more details on the company's FY25 guidance and more details on the QIP.
Well, that's correct. Board has approved fundraising via QIP route, and according to sources, the indicative issue size is 430 crores with an indicative issue price of 536 per share. Mind you, SEBI has set the floor price around 563 per share, which is at a 3% discount to yesterday's closing price. Now, looking at the guidance given by the company for FY25, it says that the capex will range between $4 to $5 billion for FY25, and EBITDA will range between $55 to $60 million. And company is well poised to meet its profit guidance for the entire year. Now, coming to company's Q1 FY25 financials, the company has logged a top-line growth of 24% and a PAT growth of 35% on a YoY basis, while the margins dipped by 40 basis points at 2.8%. Company's order book stands strong with a growth of 24% on a YoY basis. Well, the management has highlighted that the recent unrest in Bangladesh has had a very minor impact on its operations, and the stability is expected shortly. Mind you that the company's main competitor is Shein in this place. So overall, PDS Limited remains in focus.
Okay, Upasana, thank you so much for joining us with these details. And as we wrap on this edition of Midcap Radar, let's listen into Andrew Holland, the Chief Executive Officer at a Vendor's Alternate Strategies, talking about his views on the interest rate cut, his preferred themes in the Indian market.
I think we all kind of working on the basis now that the interest rate cut in September is coming. I think they should front run the kind of interest rate cycle. I think they should do 50 basis points, albeit that our base case is 25. I think that would give the market that kind of extra fillip that the Fed is ahead of the curve this time. And I think that's the key. The market continues to worry about whether the Fed is behind the curve. Obviously, the way we think about it is that, we continue to play on the themes that we think will, play out over a longer period, because that's where you're going to continue to see the earnings momentum, not just for the next 2 quarters or 3 quarters, but for the next 2 to 3 years. So again, that falls under that defense, renewables, CapEx spending kind of scenarios. So if the interest rate cycle is now starting to fall, it should be good for our banking sector in India if the RBI follows suit. And of course, we'll all be thinking about October at that next interest rate policy meeting. I think if you're playing this, you play the whole sector in the short term, and then see which ones have outperformed, and then do your kind of reallocation between private and PSU banks.